it. All right, it looks like international markets could be outperforming U.S. markets this year. At least that's what my next guest believes. So far this year, we have developing markets and also EM markets, emerging markets, outperforming the S&P 500. And joining me now is Eva Ados. She is COO of ERShares. Eva, good to see you. Tell us why you're so bullish on international stocks this year.
Well, there are many reasons to support this. First of all, we saw in 2020, China was the only economy to outperform and actually grow in terms of GDP by 2.3% when the rest of the world economy shrunk. The IMF and others are projecting that this is going to be the case going forward. China is going to lead the way in 2021 and the future. And in addition to that, if you look at relative valuations, those are much more attractive when it comes to international. We see PE ratios in the US at 23 and PE ratios in international at 16. This is a 50% differential. It's an appreciable difference. And in addition to that, we're also seeing great growth potential with projections of earnings growth of 32% for international, whereas for US, the same is 23%. So you have much higher projections for earnings growth when it comes to international and much lower valuations. In addition to that, of course, we have a strong case for the US dollar to continue to slide. That will mean that investors investing overseas will benefit from the US dollar sliding and the appreciation from that, and the appreciation for the stock itself going up. And the year-to-date data also support this. Year-to-date, the Hang Seng index is up 6%. Our global entrepreneurs are up 16%. Our international entrepreneurs are up 10%. And the S&P 500 is close to zero.
So, you certainly ticked off a lot of reasons why we could see the international markets outperform U.S. this year. But underneath that basket, or in that basket of international stocks, where do you see the most opportunity for growth, especially when you look at it against a backdrop of a weak dollar?
Certainly. So by far, the biggest opportunities are going to be in Asia, and there's a big focus in China. China's economy is growing at a very fast pace, especially when it comes to technology. We see great innovations there. For example, a great example is EHang. This is an AAV, autonomous aerial vehicle. I know your previous guest spoke about electric vehicles. Those are actually giant autonomous drones, and they can used for air passenger transportation, but also air logistics. They're already working with the Chinese government on experimental air zones, and the European government, including Paris, that they just signed a deal for experimental tests, and with DHL too for smart drone delivery. So there are great innovations coming from China. Their valuations are very low compared to the US, and I think this is a great opportunity for people to look into.
You know, there are not a lot of opportunities for yield in the U.S. fixed income market, and there's no real reason to believe that's going to change anytime soon. So what are the dividend opportunities overseas as you see them right now, Eva?
When it comes to dividend, we are very focused, especially in the U.S. We think there's, as you said, there is a strong case for increased spending with the new administration. This is going to push interest rates higher. As a result, many people are concerned that this is going to be detrimental to the stock market. We respectfully disagree. We think this is actually going to be beneficial for the stock market. It's going to encourage a further shift out of fixed income into equities. And if you look at the period between 2003 and 2007, the Fed increased interest rates 18 times. And during the same period, the stock market went up 50%. So you can have interest rates going lower and the stock market appreciating. So we think that with an increased spending and interest rates going higher, this is going to put back monetary policy to the table and be beneficial to the stock market, since money will move out of bonds and fixed income into other asset classes, including the stock market.
And then finally, what is your expectation for U.S. markets this year? Do you believe we will still end the year higher? And if so, which sectors within U.S. equities do you like right now?
Definitely, clean energy will be a big thing. We know that the new administration is going to invest $2 trillion in clean energy within the next 4 years. For example, Enphase is an entrepreneurial company that we really like when it comes to clean energy. We also think that there is, as we said before, a move to international, so people should be looking at it. And there are great opportunities still in technology and healthcare, small cap healthcare, the genomic stocks are disrupting their healthcare industry. This is going to continue. There are great opportunities, even though some categories might be fully priced. We see, especially in small caps and healthcare, great opportunities going forward.
All right, we're going to leave it there. Eva Ados, COO of ERShares. Thank you. Lots of actionable stuff for investors to take away there. Good to see you.
Good to see you. Thank you.